Here goes another one we were pretty excited for. We're talking about Etsy stock today. They just reported earnings after hours, so we'll take a look at these. Not much movement on the stock, all things considered. We're talking about up just a slight bit after hours. So nothing crazy. The initial reaction to the earnings was a negative one. But obviously already down 4% on the daily. It's pretty rough, but the whole market was going down. Can't blame it. So not much recovery from the earnings. We'll take a look at these earnings and see if they warranted some recovery. Well, I must say, this is quite an incredible earnings report for them. I mean, just being honest. Look at this. Etsy, quarter three GAAP EPS of 70 cents beats by 10 cents. Good beat on profitability. Revenue of $451 million, up 128% year over year, beats by 40 million. Crazy. And if you remember on this one, I expected over 100% growth. And you know what they did? They delivered on it. So, pretty crazy to see them put up numbers like this. I mean, that is incredible. And you see even with that no real, movement in the stock price. And again, I think a lot of that is because of a lot of this growth is baked into this company. As far as the stock is concerned, you're talking about year to date, something up 200%. Holy crap, man. 200%? What are we smoking here? I mean, clearly it's something good. But we've got overall gross merchandise sales up 119% to $2.63 billion versus a consensus of $2.4 billion. Big beat there. And gross margin rate up 820 basis points to 73% versus a consensus of 71.4. Big beat. Looking into some of the finer details once we get rid of this pop-up ad. Get that out of here. Net income growth of 520% is incredible, by the way. But again, it's based off a smaller number. And active buyers growth of 55% as well. Adjusted EBITDA came in at $151 million versus $42 million of a year ago. Consensus of $124. Big stuff there. Looking ahead, they're expecting 65 to 85% general merchandise sales growth in Q4 and adjusted EBITDA of 117 to 131, which will fall a little bit below this quarter, but again, pretty nice. And again, for quarter four, you might expect a little bit more in it, but maybe not. A little bit over consensus though still, so good stuff there. Then we look at these earnings slides. As we do, we'll zoom in just a little bit for you. We want you to see that. Another quarter of solid execution across the board is what they're going to tout. And there's some good stuff here. 116% Etsy marketplace staying alone. General merchandising sales growth. Business model strength, obviously engaged, focused team. 95% are proud to work at Etsy, which is 10% higher than the benchmark. What about those other 5%? How do they feel? Clearly, they're not happy. So, revenue up 128%, as you saw. General merchandising sales up 117. Just good stuff there. Good stuff there. 15 million new and reactivated buyers. 69 million active buyers. Then 138 million total buyers in general. Overall buyers increased quite a bit. If we're talking about total buyers, it's pretty crazy. So, due to this increase, obviously you see a lot of it is frankly masks. GMS per buyer increased 10%. Mask is pretty crazy, but non-mask also grew 50% as well. Just pretty crazy stuff to see a growth of that much. Of new buyers, 50 or 30% extra new buyers were people who were buying a face mask as their first purchase, which can be a concern. Obviously, as masks are, 90% increase actually in terms of mass new buy. Like that's I think maybe a concern there, because you think about what is the plan for after this once people have bought all these masks and then they're done? I mean, or do people stick with Etsy? I think that's a concern some investors might have. Potentially. Just potentially. That's really my main focus. So, face mask contribution, you see, pretty good stuff there. And face mask is contributing to quite a good bit, all things considered, in terms of just their benchmark goals. I mean, it's crazy to see what the face mask category do, but in general, they're doing a good job. Their top 6 categories, which make up 79% of their overall general merchandising sales, increased 92% year over year. So that's big stuff. As far as categories are concerned, their top 6 being housewares and home furnishings, jewelry and accessories, craft supplies, apparel, paper and party supplies, and beauty and personal care. Those are the top 6. Pretty nice. Mask sales of $264 million. Yikes. So again, they say that the sales are declining. They sold 24 million face masks. So that, I think, is a concern as far as this quarter is concerned. Look at the decline on these face masks, and that contributed to $264 million of this $450 million. Holy crap. So you're talking about over half, more than half of their revenue was from face masks alone. I find that crazy. I mean, I don't know. I just, in terms of general merchandising sales, that's a lot of general merchandising sales. Not necessarily that's their revenue again. It's really $264 million based off of the line of $2.6 billion, if you're being fair. So really, it's closer to maybe contributing to, let's say, around 10% of the revenue, if we're being fair. So around $45 million, I think is a fair assessment for that. $45 million maybe in revenue from these. That's steadily declining. Could be it's a big thing when you think about the potential for the future, like what that contributes to. So again, seeing that decline could be rough, but obviously personalization has done quite a bit. So they know, based off of your search history and your profile, what you're looking for, and that way they can advertise products to you better. So that's how they make more sales. And it's a recent thing for them. So pretty cool stuff to see there. And obviously ramping searching with personalization, as we just talked about. And obviously new buyer offers as they offer to keep people in and try to get people to become new shoppers for them. Gift guides, obviously they have this for meant for the holidays. So they give you suggestions of, this is what you can give to this person. It's Amazon does the same thing, so nothing too crazy. They're going to start getting into television, potentially, is what it says, as far as advertising is concerned, with the Gift Like You Mean It campaign. Again, just categorizing things. Pretty interesting to see there. Limited edition influencer collection. Do I know who any of these people are? No. JoJo Fletcher, you look... I'm not going to say she's an unattractive woman, because she's not. But still, I don't know who the heck you are. Tia Mowry, literally zero clue who you are. And Tan France, first off, that shirt color is disgusting. Looks like literal vomit. And second off, the coiffed on your hair, pretty douchey, and your nose is humongous. I don't need to be roasting people like that. I really don't. But whose name is Tan France? Come on, get a real name, buddy. It's just a fake name. That's all I can tell you. So, sorry, I'm being rude. Don't be rude. And I'm being rude. So, obviously, they say deceleration in general merchandising sales growth, primarily driven by steady decrease in masks. So, masks, the percentage of general merchandise sales, as you saw, that deceleration from 14% of general merchandise sales to now close to 11%. As I said, around 10%. Hey, the thing is, I don't need this. I have the math in my head. It's called being a freaking genius, okay? Maybe you should learn how to do it. So obviously, key revenue drivers. This is good stuff. You really like to see this. This is really all I wanted to show as far as the slides are concerned, because it mostly just goes right back into this nonsense. I do want to bring up the balance sheet because it's worth bringing up. And here we go, 9 months comparison. Appreciate that one. Total current assets of 1.7 billion, as I've highlighted there, versus 920 million is quite an improvement. So we'll see what the liability standpoint looks like, because total assets in general of 2.2 increases from 1.5 of a year ago. You're talking about nearly $700 million increase. So liabilities, I'm hopeful to not increase by that much. We see total current liabilities has risen to 341 from 188, and total liabilities in general has risen to 1.5 billion versus 1.1 billion. So again, this balance sheet isn't necessarily your greatest balance sheet in the world, but it has grown quite a bit actually in terms of an increase of stockholder equity. 660. Not gonna keep saying 3 in a row. I mean, that's just not right. You don't want to summon anything not good. So 660 million versus 400 million. See how I leveled that out to make it not as skewed. But an increase around 260 million in stockholder equity is pretty massive. I just think that this thing is, I think it's a little absurdly valued right now, if I'm being frankly honest, and I don't think it's out of this world overvalued, because you're talking about a market cap of 16.5 billion with annualized revenue this year probably closer to maybe 1.5 billion if we're being fair. They might reach 1.5 billion potentially. So, all things considered, I mean, it's not the most overvalued thing in the world. That's all I can tell you. But I also don't like the valuation of it right now, because I think the decline of mask sales is going to be quite significant for them, honestly. I really do. You're talking about 10% of their general merchandising sales could be wiped out entirely this quarter. It'll be mostly wiped out this quarter, as that decline's pretty steady. So just keep that in mind, obviously, and it's going to impact revenue. Still going to be a very good increase year over year if we're talking about through the rest of the year, but you got to mention those things because honesty is the best policy, okay? That's all I got for you today. I really hope you enjoyed, and I will see you on the next one.